Hello everyone and welcome back to TradeView Markets. My name is Jose Ricardo Tejain and today we're going to go over a few critical developments in the marketplace. We're going to discuss a little bit of a NAFTA, North American Free Trade Agreement, and its impact in the currency pair US dollar versus Canadian dollar. It is very important to understand that all the information provided does not constitute financial advice. At the same time, please remember that this is not an invitation for you to sell or buy any currency. We'll go over the charts, we'll take a little bit of market fundamentals, and we'll jump into our MT4. But before that, as usual, we want to extend you an invitation to explore and try the different technological platforms that we have, the trading platforms that we offer. We start with CTrader. This is very elegant, and what it does for you is that it offers market depth. This is very important for those of you that want to jump into a more professional approach to trading. Of course, if you're looking to free some time and more hands-free approach, then you want to go with the well-known MetaTrader 4. It will allow you to explore and take advantage of the auto trading capacity. And if you are ready, and if you want to jump into the most professional platform out there, one of the most professionals, TradeView Markets does offer CurrentX. It will give you an only execution platform where basically you will have access to know the interbank liquidity. Very good. Now let's go to the charts. We're going to start with the US dollar, USD versus CAD, US dollar versus Canadian dollar. And first, as usual, we're going to start with the most basic approach, resistance and support. And here I'm taking information from 1996 all the way to 2018. And first, I just want to make sure we are on the same page as far as understanding that the market does have memory. What happened in the past eventually will happen in the present and in the future. So we're looking at this point here, which is I'm looking at the current price 129.44. But if I go all the way back to between 2001 to 2004, you see that this level right here was some sort of support. Eventually it became resistance, and now once again support somewhere here between 2012 2015, and then once again it's a resistance, something that we must pay attention. Now on the technical levels, always you want to understand that in order for the price to continue higher from this point, it will require a close and open above this range. Now we do know that the high so far in 2018 is 129.99. We have mentioned this before, the most critical levels that institutions from Barclays, Lloyd's, JP Morgan, Bank of America Merrill Lynch, all of them, they watch the round figures and the middle range that goes for the 130 and the 129.50. Right now the exchange rate it's below 129.50. That means that there are some interest by institutions to protect this level, but at the same time the 129.99 was protecting the round figure 130. Keep that in mind all the time, and of course vice versa will be also a valid statement. Now prices will need to close above the 130 round figure and open to make sort of a bold statement that the US dollar is ready to target the 133 level. Now, in order to that happens, besides the technical, we need to have the fundamental picture and put it together. Now, I'm just going to go to Google. What a great tool, right? And if you were to type in NAFTA talks, now, this agreement was signed back in 1994, and it was something between Canada and Mexico. Of course, the US, United States of America is involved. Now, whatever happens with this agreement will affect those currency pairs. You have the exotic, in this case, something that we will talk in future videos, the dollar versus the Mexican peso. But of course, you also have a currency pair that is fairly liquid, if you want to think about currencies that are traded on a daily basis. And if, by any chance, if Donald Trump, the president of the US, actually decides at the end to, just take the US out of that agreement, well, of course, it will be something that will affect the Canadian economy as well as the Mexican economy. So you have to keep in mind that that fundamental thesis, or pretty much what is developing out there, it will impact the currency pair. If the US, if they decide that it's over, it's not free and it's not fair for the US, well, that will have impact on not only corporations from Canada and Mexico, but also on the life of millions of workers. So that's something that you can always do a quick research on Google and get more information and specifics. On top of that, you cannot forget that over the last 2 weeks, we also have the dilemma and always ongoing drama of the tariffs. We have the steel and aluminum tariff on the horizon as something that, although a week ago when there was an exception with no specific timetable for Canada and Mexico, you still have to count that in. And as you can see, read on the headlines, Trudeau, he doesn't want to link those two together because it does not support a stronger Canadian economy. Let's go back, and one more, just getting this information from our colleagues from EFX Data, Thomson Reuters. It's very important to understand what others are saying. Let's see if we can get that information from Mitsubishi Bank of Japan, where they discuss a little bit on the fundamental technical picture and how NAFTA talks may impact. And although in the short term the price of the currency pair may rise above the 130, they do see 132 as the limit upside for the currency pair. Let's just go back, and I'm going to take these levels and share with you. As usual, we're going to add our 50 period exponential moving average, where we know now our support monthly, it's 124.72. But if we were to take Fibonacci just to play with it and give us a map, an idea, we'll see right here that once again the 50% level, although never forget the 61.8% and the 38.2% are the two most relevant. We use the 50 just to give us an idea, and it tells us, as well as looking at the charts, that from 1, 2, 3, 4, 5, 6 months, 6 months, this level, the 129.50, has been a critical level to stop the buying pressure going to target, that actually wanted to target the 131 level. Now, as usual, close and open above this level, the 129.50, will then indicate that there will be a continuation in this recovery